Welcome back to Opening Bell. Feeling a little positive after a little bounce Friday. More likely we get a cut. Let's see what Rob Luna, CEO of Altria, has to say. It's good to see you. Look, we're about 4% off on the S&P 500 off the highs. NASDAQ's about 7% off. We did have Deutsche Bank saying 8,000 by the end of next year on the S&P. What are your thoughts on the market action here near term?
I think in the near term, look, Nicole, we've got a lot of concerns out right there right now, and I think a lot of them are justified. You look at what's going on in Japan with the reverse carry trade right now. A lot of people were taking a look. You saw last week when NVIDIA reported earnings, everybody got really excited about it, but then they started looking at the receivables and the backup of that. They're worried, are these guys getting paid on time? Is this something that's indicative of something much larger than that? So I think there's some credit issues out there, not to mention, Nicole, not to throw more out there. We've got about $1 trillion in commercial real estate debt that needs to be refinanced. And we all know that a lot of those buildings are a lot more vacant and rates are much higher than they were when that debt was taken out. So I think this credit issue, this liquidity issue is what really has the market worried. And at the end of the day, we know that stocks aren't cheap. That being said, I think this AI trade is not going anywhere anytime soon. So when you get these big pullbacks, I think people will be coming in. But look, there's some nervousness out there right now. You mentioned a little bit earlier, the Fed more than likely, I think what they see what's going on with credits, they see the nervousness in the market. I think more than likely we're gonna get a rate cut on Friday.
Okay. Looking forward to see what happens there. Friction points for the markets. Can you describe that? What are some of your biggest there?
I think the biggest friction points right now just are algorithmic trading and people being worried about liquidity that's out there right now and valuations. Valuations by no stretch are cheap. If you look at the dividend yield on the S&P, it's the lowest that we've seen in decades. So right now, this is not going to be a value market. That in itself doesn't mean anything. We saw stocks during the internet go up year after year after year on high valuations, some of them justified, like an Amazon. You're never going to buy that at a discounted rate. So I think, some of these names right here will catch a bid, but you've got low volume this week. You do have some nervousness. You're seeing every asset class, including Bitcoin, get beat up right now. So I think there's just a lot of nervousness that we need to get past. And we need to see some continuing days of stability where you could see a day like this where the market opens up, but we close near the highs. And right now it's not been buy the dip, it's been sell the rip. And we gotta get away from that before this market can stabilize.
Well, look, you said to keep some dry powder. You might step in and buy a name like Micron, for example, right? Tell me why.
Yeah, absolutely. You look at a name like Micron, you look at a name like Seagate. These are the picks and shovels, if you will, of what's going on with the AI trade. You need storage. Right now, you need memory. All those things are going to play out very well. These names have done well, but you're starting to get a pullback. And these, when you think about Micron, you think about Seagate. Yes, they are known names, but they're not the Amazon. They're not the Apple that everyone is talking about. So I think these are stocks with a much lower market cap that have room to run if you could buy them on a pullback here.
Yeah, you mentioned Cameco too, CCJ. That goes into the power part of the story, right?
Yeah, power is definitely something that we all know we're going to need to be able to fuel this. And a lot, I say Cameco, but if you look at NewScale, you look at Nano, you look at Oklo, these are stocks that absolutely have been hammered. And I don't see a way through, if you take a look at this just mathematically, unless we can enter nuclear energy into this space, I do not think we're going to be able to build out AI nearly as quick. So take a look at these. Reminder, though, these are super volatile stocks. A lot of them are pre-revenue. So take a look at them. But if you're looking to get into a space like nuclear, we haven't had an opportunity in a while, and this could be a good spot.
Also, I think about, and you have Ouster in there as well, but a small cap with high leverage, you said.
Yep.
But I think about the big story, and something I read this weekend was that it's not an AI bubble, it just may be an entire bubble. Are we worried about that?
Yeah, well, as I mentioned, the market in of itself is not cheap. I think a lot of money has flowed into the market for a long period of time. We're a few years into a bull market right now. So if you take a look at that, again, valuations aren't cheap. And at the end of the day, I think one of the biggest worries about AI, we know that companies will continue to invest in AI over the next year to 2 years. That's already been telegraphed from some of the big players out there, and you look at their CapEx spending. So it's not a space that you don't want to be into. But as I mentioned, the reason they're making this investment is because of productivity. What does productivity mean in general? It means you're cutting headcount. It means you're cutting staff. And I think over a long period of time, the next 2 to 3 years, unemployment numbers are going to continue to rise. And if we are a consumer-driven economy and people don't have jobs, who's there to buy the goods and services that we're creating. So I think if you look forward, that's one of the things that people are worried about. But I do think it's going to kind of be like what you've seen this year, Nicole, where some of the companies that are able to, be a backbone of what's going on with this AI revolution are going to do well. But there could be a lot of companies that could get hit. So you have to continue to do stock picking here.
What do you think about, the Mag 7 names? Do you have a favorite in the group?
Well, look, I think Google is one that's starting to rally right now. That's interesting because if you look at ChatGPT, a lot of people thought, hey, this is going to be the end of what we're seeing with Google and search domination. But now you're starting to see, you were just talking about with Gemini, that they're actually a major player. And we all know that Google was, the standard. I go back, I'm old, Nicole, I was trading in 98, 99. We didn't know if it was going to be Google or Lycos or Ask Jeeves or what it was going to be. But now, Google is a household name. And if they can put some of that power that they have, the money that they have on their balance sheet into this space and take that market share away from AI, Google has been a pretty cheap stock relative to the S&P, relative to what's going on in this space. I really like that one. And you can't not have Meta. I think, they control pretty much everything we're doing in terms of consuming right now. And then again, Amazon. So I would say Amazon, Google, and Meta are definitely ones that you want to have.
All right. Rob Luna, CEO of Altreon, thank you so much. It's great to see you. We appreciate it.